All right, let's jump into it. Bit of the weekend wrap. Where we at? 5 past 10 p.m. on 16th of March. So just a Sunday before we get sort of stuck into the week. Look, a bit later again, but again, as I say, pretty much the same every week. I'm like, I gotta do this a bit earlier and that, but inevitably things sort of pop up and that. Saturdays, you're just like, oh, God, give me the week, it's over and that. But as long as we get it done before the week starts, that's the main sort of thing. So I got to the F1s today, which was pretty fun, pretty good. And so here we are, Sunday night, having a look over the market, see if we can sort of pick out a couple of trade ideas for the week. And yeah, sort of see if we can sort of pick up any sort of trends or correlations that we might be seeing. So, look, I'll start off with gold because I mean, this has just been an absolute ripper of a trade. And look, it has been, look, this last week setting up through this sort of consolidation period, where we are 16. So, this is actually sort of coming back a week and a bit through here. But this sort of period here, this is a very good setup in that we sort of see time and time again. And I've said, and I called it as we were doing it. But basically, this is your it's a very sort of typical silver kind of setup that you see, where it comes up, hits a straight line, deeper, 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 deeper pullbacks each time in that, and so when we were down here, I got a couple of good long positions down here, and I was like, okay, look, if this comes back up to the top over here, this is the setup that we're seeing, and this is a bullish breakout continuation kind of move. And that's exactly what we saw. And we got the explosion up here. I thought we might have got a deeper pullback after that sort of first push, maybe a little bit of a retest to sort of then reload because we were probably definitely going high. I mean, as I said, like after this kind of setup with this kind of consolidation, there's no sort of like sort of set sort of okay, the last depth, excuse me, depth of this sort of pullback here gives you the sort of price target. But we can use little things where we use this little flag built inside it here. We could use this sort of, the sort of, I guess it's kind of like the pole of a kind of a bit of a flag. I don't know if you'd call this necessarily a flag setup. I don't know if there's a name for this thing here. It's just something that I sort of pick out when I see it showing up on silver and that time and time again. But obviously that measure move took us up to 29.74. And once it sort of got up there, you could tell, look, it's just that close, 3,000, place to hit it. And I actually started sort of chucking on some shorts just up around this 3,000 area because I thought, look, there was two things that were going to happen here. One was going to be some absolute massive explosion up to the top side, in which case, okay, you got that wrong, bang, you cut them and see what happens. And again, if it went up really fast, like if it shot up, shot up, shot up, shot up like that, so we've got 50, that $50 move or something like that. Look, it has happened before. I think it was back in geez, I would say maybe 23, October 23. I cover it every couple of days or something. I seem to reference that move because it's stuck in my head. And that's the thing. You got to trade through these things to really feel it and remember it and know, okay, look, I've seen this happen before. That was Monday morning, 9 o'clock or 10 o'clock or so. Start of Asia, before Asia actually, and then bang, $50. And I think it moved like about $70 or so. But the reversal, the point with this is the fast move up, just reversal, and then came back down. And I think I sort of covered it the other day, and then it came down 6% or something from the highs of that, which is quite a significant sell-off. Point being with that is that even if it did fire up over here, there's most likely it was going to be seeing a medium-term top to sort of come back down here as well. We didn't see that happen. We saw it get to sort of just over 3,000, sort of sat here for a few minutes, and then bang, it dumped down. Like we get on a lower time frame, it's about $20 it dropped very quickly. And this move up here, you can see it once it started getting up around the sort of 90s area. You're like, look, it's too close to not go to 3,000. Got up to 3,000, held there for like a minute or two, and then you can tell. The thing is with this, there's going to be people that are like trade, 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 trade. Once it hits 3,000, let's take our profit. And this was the thing that, as I said initially, there was going to be two outcomes of this. One was going to be a big, massive rocket. Well, technically three outcomes. One was going to be a big, massive rocket to the top side. Second was going to be some sort of sharp or sort of pullback. And the third would obviously be kind of nothing. And on a whole larger scale, it closed very high up towards the high of the day, high of the week, all this sort of kind of stuff. But, that quick sell down there actually produced quite well because it was about a $20 sell down. And then, of course, we had a bit of data through to sort of end the week out. And, that was sort of sold into there. So, the fact that it didn't sort of close up past 3,000, look, it's not the end of the world. But if we jump this onto maybe the 4 hour, the 1 hour, I think 1 hour kind of shows it a little bit better here. You can see that this is starting to form a nice little ledge that this could potentially sort of come back. So two little levels through here that I'm kind of looking at. This being one, and then a second here. So you got your first layer of buyers that are really trying to sort of keep it up here. As you can see, it comes down, they buy it up, comes down here, they buy it up, come down here. They're trying to hold it over here. It's pulled back a little bit. Look, I personally think you probably do have a little bit of a sort of pull down. So I would be, I mean, you got to have balls of steel to be sort of buying this thing while it's at 3,000. Yes, it's probably going to push up a little bit higher, but the risk reward's not there, particularly after we had this week-long consolidation. We had this big explosive move to the top side. I say these things. The profit doesn't belong to the people that sort of look over the weekend and have done their own research over the weekend and see that gold's hit 3,000. More likely, the risk is that you're going to see some sort of like profit taking from these positions, from all these people that are, even just through this last period where we had this sort of pullback down to sort of 28.32. I mean, excuse me, it's $170, $180 move, buck move from the lows over there. Even this last leg just up here, obviously, sort of like, we should pull back to sort of 28.79. I mean, you've moved up 28.79, so 120, 125 bucks, 126 bucks or so. There's a reasonable argument that you will see some sort of back test. And, the point is to sort of pick where, if they are going to pull it back, where they're going to pull it back to. So you can sort of update this a little bit, put that up to the highs, and this is obviously our move up here. Just so we don't get too confused, let's get rid of a couple of these. Out here, this is your pullback, clean this one up. This is 50% for this move here, and then we're starting again from this move down here, go up here. So look, if we come back to 38%, 38% still very bullish. It gives you a chance to retest the highs over here, and then sort of, potentially buy a step back in and continue this thing on. Look, I mean, as I said, Monday was when we saw that large move. Could be a move up to the top side. But the difference with that time where we shot up 50 bucks or 60 bucks in 15 minutes or whatever it was that it was coming into quite a high time frame resistance level, I'm pretty sure. So that sort of like obviously has had time for people to develop all their stops at that level to fuel that explosive move higher. And I covered this on the Friday analysis where, this is what we pretty much saw through this period here, going over where these potential, hence this where this stops is drawn out here. The idea was that, look, you have a couple of stops just above the highs. To close those short stops, they got to buy it. A couple of people are like, I'm going to be clever, I'm going to have it a couple of bucks up. These ones trigger to buy these ones. Next layer, these ones trigger to buy these ones, so on and so on, and it moves up through that. So I feel like, probably the whole sort of stop hunt has been hit through here. I do think the big round number, 3,000s, where a lot of people are going to be like, you know what, I can take a bit of profit on this. And I'd probably be looking more for a little bit of a fade of this move. It doesn't mean, I mean, look, I'm not a sort of buy the top and ride it to the bottom or buy the bottom and ride it to the top kind of trader, of course. But, I think that potentially you could see a little bit more of a risk that this is going to be coming down or pulling back. And then we look for sort of potentials of where we can get long with it all. Because, like, it has stuttered a little bit around here. I mean, if you look at how strong this whole move was back up here, we had little pullbacks. But of course, once it's starting to get these deeper pullbacks, yeah, it's recovered, but it was getting close towards the end. I suppose you had these ones that are quite deep along the way as well. But, these are kind of more significant. Like, I mean, this is a smaller one. This is slightly bigger. This is even bigger to get back up over to here. I do feel like it's kind of, how many times can you buy the dip? How many times can you buy the dip kind of thing in that? So if we have a look at just where the buyers connect these lows with those lows through there. No, I don't have anything that really sort of lines up with these. I guess you take those highs over here. I mean, this is very early days if this were to be a thing, and I'm not. I mean, a rising wedge like this is a bearish reversal, of course, which could be leading to a bit more of a sort of downside move. That's actually quite interesting. If we have a look at this here, this last sort of consolidation period from high to low here, when we're thinking that this could have potentially been some sort of range, this is all actually sort of come back out exactly pretty much to where we've stopped up here. So from these lows of that pullback in October, was it? Yes, there's an October, November pullbacks down here. The depth from the highs and lows there seem to have leveled up quite well up the top over here. Let's just whack this up here for now and see if this can sort of hold as a bit of a high. So look, as I said, look, I do think we do have potential at some point to go higher. I've been calling Team 3000 for a while, but I am reluctant to be sort of piling on too many buys just at this point here. I think at best you could probably sort of wait for a little bit of a pullback, potentially to these most previous highs, where we kind of thought those stops would have started to be from. Let's just call this a zone, so we're not getting confused. Back around the 38%. So yeah, drag this thing through here. So if we start to sort of say it's, so let's build it out. So you've got the first layer of buys here. You've got a little second layer here. I would say safely underneath 74. You look for a pullback. It's only 20 bucks or so, but you know, maybe overshoot a little bit more around those sort of 50s areas. Then you'd have a shot. And this could potentially be then sort of moving back up through this leg over here. So this leg here would then sort of be telling us, are we going to see continuation overall? As I keep sort of saying, you know, you're going to move up, you're going to find resistance, you're going to come back, you find support. Where do you find support? Previous resistance is a pretty good position for it all. Then you're going to get this leg. So this leg is going to come. You know that this is going to come. This pullback, if it comes, could come down here, and then we could see that leg coming up from here. So it could snap out a whole bunch of people sort of coming back down here. And maybe that's when you see this little wedge start to shore up and form up a little bit more. That'd be quite a deep sort of pullback though. So 29, 27, look, it really depends how many people are sort of really eyeing that 3,000 level. And by people, I mean as in sort of realistically people that are moving markets and that kind of stuff. How much are they eyeing 3,000 and saying, look, that's a good profit-taking position? Because if enough of the people are there just going to pile on and pile on to profit-taking, you could see a deep pullback. You know what I mean? It would line up. It would give you the 61% pullback. It would sort of play into what this rising support could be along here. Could play into this idea of a bigger, larger, higher time frame rising wedge. Excuse me. But as sure as it will happen, you'll get this leg. You'll get some sort of leg through here. It's just a matter is this going to come back down to 58 or 53, whatever, around this kind of previous highs as a support. Are you going to see buyers step in there and have this sort of leg here? This will give you a better sort of risk reward than buying it just while you're right at the very top up here, because this leg will come. And if it comes down a little bit further, that's fine. That leg will still come. And this is the one that you want to see, because this one's going to tell us, are we going to get the lower high? Are we going to get a double top? Or is it on with the show? And are we going to sort of punch right up towards sort of 3,200 or so? Look, people have been calling these higher numbers, but you're reaching up into the sky. There's no possible way that you can really sort of, well, not no possible way. I'll take that out. It's a little bit over dramatic there, but you know, there's no sort of surefire sort of thing to sort of say, hey, look, given previous things, because there are no previous things. All you can do is sort of stand back on the chart a little bit more. And actually, this other chart, I think, sort of that I had might sort of signify it a little bit more. And we can say, look, you know, this is a kind of decent little channel that we've had sort of moving along through these areas here. Is this maybe? Yeah, something along this line. Look, sells here, sells here, sells here. Is this going to push back up? I mean, look, it could push up another sort of 70, 80 bucks and go up to the top. But I put this chart up a while ago saying that this is a potential for a play, that it would move up into this area, hit this price target, 3,000, and then we could see some absolute monster pullback. And by monster, I mean, look, 180 bucks and that is monster. But, you know, you got to put these things in context. Look at this sell down that we had in October. You know, that comes deeper than this. This is, you know, if we were to see the same pullback, I don't think this is going to happen. I'm just doing this for the sake of it. That takes you right back down, you know, 7%, 230 bucks. These things don't happen in one move, by the way, if it is going to happen like this. But the point, I'm just emphasizing the point that sort of like these sort of sellbacks, while everybody was super bullish at this point here and going high, 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 and it just got crunched. So these things can happen. Just because it's made a new high, you had to sort of pull back, pushed on a little bit higher, pull back, push on a little bit higher, and then crunch. Yes, given long enough time frame, it's just come back, and obviously this year we've just seen things explode to the top side. But these things can have deep corrections, and you got to think, where would these deep corrections come from? Well, big round numbers, that's a big one. We're seeing sort of like potentially coming up into a zone over here. So I think sort of we're within sort of 50, $60 or so, which is in gold terms still a big quite a large window and a big tradable window. But 50, $60, I reckon we could be starting to see something where it's exhausted a little bit and maybe it starts to pull back. I mean, we've got equities that are absolutely on their knees at the moment, and I don't think that's necessarily at the bottom, but I did layer a couple of sort of short swing positions. Sorry, a couple of smaller, not short, a couple of smaller long swing positions this week, just based on the idea that, even because the sell down's been so strong, even a pushback up to say 23% fib or 38% fib still yields a great points return. So, you know what I mean? Like these things are going to turn around eventually. I know catching a knife is a dangerous game to play, but the point is, it's sort of like, once you see the flows come out of here, they're going to look for undervalued things. What's undervalued at the moment? Equities are. So that's a good, reasonable idea that people will be pumping a bit of money in over there as well. I'll get to DXY in a moment because that's setting up like a little bit of an inverted head and shoulders. If that thing decides to break up a little bit higher and try to make even just a sort of a little bit of a short-term rally, that could also feed into sort of gold having a bit of a deeper pullback. So all these things combined, I just would be reluctant to be buying a whack of gold at this point. Oh, geez. I'm having a bit of internet issues here today, so as you can see, internet's just dropped out again. Back in a sec. All right, back online. But yeah, certainly tech issues are one thing that I don't deal with. Anyway, look, long story short, I think sort of there's a potential that we see a little bit of a pullback sort of coming through here. We've got this first layer of buyers around this sort of like 84 level, but I think sort of once you push underneath 74, I think that opens the door to at least undo this big sort of breakout candle that we had down here. So your first target around that sort of 29.50, as I said, comes in very much in line with those previous highs, undoes this big candle move here, gives it a chance to pull back to the 38, and I reckon this is a good area where we could see buyers potentially look to sort of step in and then have another run up here through the top here. If this doesn't hold, then again, you're looking down previous retest levels. We never got the retest of this breakout here. We kind of almost got to the top of these wicks with this little pullback down through here, but never really a proper sort of pullback down here. So should the 50s not hold, I think, you're looking down around those sort of, 27, 29, 27 kind of levels, which is quite a deep pullback, but 61%, excuse me, which we know, market is very capable of doing. This large push up from the lows came down to 50%. So, there's a couple of layers through here. 50% doesn't really line up with much in this case. Not really. So I would sort of really be looking around the 38, or if the 38 doesn't hold, I'd be still looking for price to push back down towards the 61% retracement, which depending on the speed in which it comes down, if it dribbles down after, this takes us to Wednesday, we've got FOMC this week as well, remember, that, potentially we could see this come back in. And then you've got a bit of a nice confluence. You've got, they've got the 61%, you've got the sort of rising support, this little level through here. So they're the two little parts that I'm looking for, but I reckon that we're probably due for a little bit of a pullback here, and not so much that people are selling, but just more profit taking. I think, there's a lot of profit on the table. Golds have been running very high. You've got a big bash down of other markets where you're gonna offer a better risk reward. And if you've got a lot of money, you'd probably pop it in somewhere else, and then you could even look to get back in these sort of levels. As far as the technicals go as well, this 4 hour here really looks like it wants to come down here and push back down a little bit more. So I wouldn't be surprised if we see some sort of cooling of gold through the early part of the week, despite this big bullish push up. In saying that, these things tend to not go down without a fight, so it could just push up and then go down like this. If we see a push up early and then take out the highs and then reject back down, I think that sets up more for a move down to the 61%. If we just sort of break down and dribble down early, I'd be looking around the 38%. So they're probably my two conditions, which I'll probably draw into these for earlier through earlier, but for sort of through the week. But yeah, I'd be looking for sort of rejections through these levels and confirmation underneath 74. All right, so a little bit of a workaround, just be flipping between the charts. May not be able to sort of change the time frames. We'll see how we go though. So jump onto Aussie, and Aussie, look, it is kind of struggling for direction here. It is like wanting to push up, wanting to push up. It is back up to the sort of retest of this flag, and this is what I've said a couple of times, particularly with Aussie, with the way that it works with these falling resistances. It breaks out, it retests, but the retest will always be deep. Well, not always, but a lot of the time will be deeper than the breakout point. So breakout point here, obviously being this sort of 62.97-ish, came back down here, wiped out the lows here, but really this was a back test of this falling resistance, which acted as its support, a little bit of stuffing around, and then grinded up through to swing high position to close the week out. So it actually closed in its immediate on a relatively sort of bullish kind of move, as you can see, dribbling up sort of through here. The fact that it didn't go through this level, I think, is something you need to take note of, because I think this could potentially end up being something to this effect now, and we could just be seeing a little bit more of a larger grind through these zones. So if we fail to sort of get out the top early, if we don't sort of start the week and then punch out and hold 4 hour above, say in the 40s, I think that's has got the potential to then just sort of dribble, and then move back down here, and we could just see a little bit of a range play coming through here. As I said, we've got FOMC coming up this week, which could sort of play into things. There's been some more sort of updates on what the market supposedly is thinking and pricing in for that, which I'll sort of get to in a moment. But in terms of the technicals with Aussie, look, it's all in all, it is kind of still moving in a kind of upwards direction. But you can see that the market's starting to, I'm not quite sure, it's starting to sort of pull out these sort of tops here. And if we actually drag this through, so where's this one? This is obviously a higher time frame retracement there. Let's maybe clear some of these up so we can see what we're looking at. So this immediate move here, back down to the 61, dribbling back up towards the top here. Let's get rid of this pullback here. And I think this is the higher time frames on it. Thing for high time frame. High time frame. Cool. All right. Kind of clears things up a little bit here. So we can see that obviously this move coming up through here, around the 61% rallied, and it's just not quite getting there as of this point. So I think that's the call early in the week. If we can get up above the 40s, into the 40s, I think you've got a better chance of sort of tackling those previous highs over around the 60s. 60s are your breakout. And then once you get your breakout, then you're looking for your measured move, which takes you back up past 64 in those highs over there. So I think that's the first little step you need to see. If it fails to do this over here, I'm a little bit sort of more on the idea that, okay, it might dribble a little bit. If we drag the highs from here and the highs from there, you can see you're pretty much coming in. Let's make this a different color so it stands out a bit more. You're pretty much coming in into that falling resistance here. So you've got this level where we have previous highs, it's been a bit of support, we've already sort of isolated or sort of identified this level through here, these 6320 zones as a sort of crucial point to be above or below. You can see that, it's come up here, sold down, it's come up here, sold down, it's come up here. Question is now, do they just do the same again and sell it back down? If we see the absence of sellers at this level, it then sort of opens you up to take you through this falling resistance, because on a larger scale, they're moving down, they're moving down, they're moving down. It means that you're breaking two lots there, because you're breaking this horizontal and these most immediate sellers on the horizontal. You're also breaking these sellers that are trying to swing this thing and push it down with lower highs each time. So I think sort of this will be quite a crucial area. Above sort of 40s, I'd say we go a bit higher. You fail to get through here. Well, you've got two lots of the market then, of course, selling this down. You've got lower high, lower high, lower high, plus you've got these horizontals coming through here. First target then is to bring it really back down to the bottom of the range, where we could say these are probably the more recent levels that you're looking at. around the sort of like, 62.80, 62.80s. So I think that's your kind of move there. Either we break up higher or we just look for this little range and we look for some shorts down here. Given the fact that we may potentially see, I'll get onto DXY next, a push in US dollar because it has come off a strong support line, that does lead to the idea that you might see Aussie particularly fail a little bit here. If gold sells off, US dollar runs, copper's actually holding up quite well. We'll get to that in a moment as well. But if US dollar runs a little bit, gold sells off, that could shake the market a little bit, and we could see a bit more of this. Like the fact that it's broken out, came back here, it hasn't managed to push through, I think is a little thing of concern. So unless it breaks above there, I'd be probably looking for some short-term shorts to maybe just fill out this box here a little bit and fill out this range before it actually makes a decision of what it wants to do. I think this is just might be a little bit too much resistance for it just at this point. Flip along. Actually, let's get straight on to DXY on that as well, because we are seeing a little bit of what we call the other way, this rounded bottom through here. And although it has sort of came back down quite sharply. If we have a look on the 1 hour here, so this was 9 o'clock last night, so it came down a little bit early on the Friday session. So if we have a look at the Friday session, we didn't really have much data coming out till consumer sentiment, which came out obviously later in the night, 1 a.m. So we can see this actually dropped off a fair bit through here. So we got last month was revised down a few ticks in that. They're expecting a little bit of a tick down, but they got quite a significant drop off. And again, this feeds into what I've been saying about sort of US dollar being held up by tariffs opposed to being held up by economic data, because the economic data is just not great for US dollar at the moment. I mean, you have a look back at the PPI, we had CPI these weeks, both sort of things that don't really fall for ticks in the camp of this being a something to sort of push up a bit higher. So anyway, those things are working against it, but the thing is, at the same time, it can still rally, even if it's a short-term move, before sort of failing down. So I am camp 101. I do believe we are coming down over here. I believe this could be a little bit of a stall, a little bit of a sort of squeeze, and as we're seeing, a little bit of a potential technical move. I think you sort of, 104 is going to be your crucial thing, because you can see that this is obviously a level where the sellers are very keen to sort of keep this underneath. Should you go through here, okay, well, next move is up to 440. A measured move on this. This is a bit of an ugly looking inverted head and shoulders, in the sense it's got, those little double head sort of thing. And, typically, I've heard that sort of to have these things, you want to get the shoulder on the left should be equal almost in length of time, so as in the same amount of candles as the shoulder to the right. I don't know how much truth there is to these sort of things, but if this were to break, so, and this is what we do, we sort of prepare for both sides of it all. So you pop this on here and you say, look, if this were to break higher, and we were to say, hey, look, here's an inverted head and shoulders, and it may potentially break higher, where does it give us? It gives us 104.75. So I'll put this as a price target on the event that it breaks past 104. And of course, 104.40 I think is going to hold a little bit of a sellback area for it as well. So let's put this for price target. So this price target, as I said, is based on the idea that you've got an inverted head and shoulders, you break through the neckline, and then obviously, you got to get above 404. But I think this could sort of definitely squeeze out a couple of people, complete this, and then we look for a little bit of a pullback down there. Because if we get onto this one here and we drag this out here through here as well, I mean, even if it did sort of have an inverted head and shoulders, it did break up and move up over here, it's still within underneath the 38%. And like we've sort of covered a number of times, 38% is still obviously strong continuation. And if you're going to sell this thing, and particularly if you're saying, hey, look, let's go to 101, if you've got the opportunity to sell it from 104.70 opposed to selling for 104.67, well, obviously you'd take the higher one there. So, these kind of things sort of mean that sort of, you could there's potential to sort of squeeze out a couple of people here as well. Look, we could open up and this could drop down here. We could see gold rally up and go the next level, 3,100 or so. We could see, these sort of things happen. But again, the main thing is just about sort of going, okay, where have the buyers been? Where have the sellers been? So we can see buyers at this level here. They've moved up their bid to here. As of this time, they've moved up their bid to here. And these are the kind of things you want to see, as I said the other week with this rounded bottom, this is what you want to see happen to, like if you're on the sort of long side of this thing, you want to see the people that bought it down here go, you know what, I'm happy to buy it down here. Or inversely, the sellers and they're going, look, I'm going to sell it. There's just not enough sellers to get the price down here. So, the best they could sell is at this price and the buyers will take it. And the buyers have then repeated that process and pushed it up here a little bit higher. This is all negated at 103.40 and then, of course, underneath 103.20. Underneath 103.20, I think regardless of when it happens, whether it goes up and then back or whether it comes straight back down, I think that's your level. Lost the internet again. Oh. I did not do technical issues. Back in a sec. All right, so finally got a bit of a word that apparently the NBN's out. So, yeah, interesting. Anyway, long story short, I don't think we could draw on the charts, can we? No, we can't do anything. Okay, I can move in and out with it all. Anyway, regardless of it all, the does open up potentially for the idea that you may see a little bit of a rally up here. I think if we move above sort of 103.80 early in the week, I can't put alerts on there. If we move above 103.80 early in the week, I think you've got to really sort of pay attention to that 104 area. Above 103.80 will open you up for a test up here. You've tapped into it, you've tapped into it, tapped into it, tapped into it, tapped into it. Like anything, there's only like tap, 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 tap. Eventually it goes crack and goes pop. You've got stops. The people that are really trying to hammer these things down, they're going to be having their sort of, stops. And again, obviously, still with DXY, this is going to be like mainly your Euro sort of things because Euro's not looking as flash hot as that sort of big mammoth 5% move that CAD may sort of lead you to believe. Oh, and we've got internet back. Oh, that's good, sweet. So let's jump back onto the chart we're using. So, here we go. It sort of updates all those lines, all those things. So let's just get rid of all this. It makes it a bit of a low-tech video today. So let's say above 105, let's put these alerts of other things here. Above 103.85 here. So let's say it's targeting 104 neckline breakouts. If we do get a breakout there, obviously your first thing is going to be these other sort of areas where we've seen them technical sell down, but measured move takes you to 104.74 and then potentially down. If this thing breaks below 103.55, it doesn't mean it's out. Like really, you've got till you sort of see what happens with these buys down here. Maybe you do get this full rounded bottom kind of thing. I'm not a big sort of like rounded bottom. I just did it more to emphasize the point. But your quick shakeout down here. I think till this thing goes underneath 103.14. That's what I was saying before. I think regardless of how we get to this point just here, whether it's up and then down or whether it's straight down, I think once you get to this point down here, template, direction, I think that's it. I think you sort of down here, you're moving towards that 101 target. So 101's the main goal, open to the idea that we may sort of squeeze a little bit prior to it all. You got to think, would this happen at the same time as gold potentially sort of seeing some profits? Look, just as much equities are being smashed, US dollar's been smashed. Correlations, as far as 2025 are out the window, as far as I'm concerned. Equities down, US dollar down. We've seen it. Flight of capital out of the US. Gold has been pumping to the highs. So there's no reason, given that, now if we see some profits come off from gold, that we can't see equities and US dollar both rise at the same time. And I think that's one thing to be aware of. I don't think it means that, hey, we're coming all the way back up here. I don't think things have changed enough till you sort of fundamentally give them a reason to pump all that money back into the US through strong economic data, through inflation creeping up. I just don't think the framework is there for it to sort of come back up to these levels over here. But there's certainly no reason why it can't come up to 104.70s before it moves back down a little bit lower. So that's what I'm open to with the idea of this. Silver, rocking along, broke out the highs, had this little back test. Now, this is the thing for silver. Above one, oh, geez, flying back and forth with the numbers, above 34.10, those previous highs there, you're looking back up to 34.60s. And of course, this area here, back up towards 34.50, let's just put a little bit of a line across here, because that was a little bit of a high. These kind of areas up over here are definitely going to sort of see some selling, because this has been an ugly, ugly, ugly sell down all the way back up over here. And it's funny because I was talking to somebody today at this F1 thing, and they were saying, oh, they don't trade metals so much, but they were saying, oh, don't you find they kind of all move together? And I'm like, that's a very sort of broad, and this guy trades equities or something like this, but it's a very broad sort of stroke sort of idea of, yeah, gold and silver move together. Yeah, yes, gold will move and it will drag silver, but in a probable market of metals, then silver would typically outpace gold. But what we have obviously seen when you put gold and silver side by side, gold is at all-time highs. Silver's not in that realm, and that's fine. Silver can still be sort of producing in that without being at all-time highs, which is equivalent to like $50 or something like this. But if we just look at most recent price action here, back in October, silver got up to these sort of 34.50s, just under 35 levels, and it obviously sold down and it's moved back up, while gold is like absolutely dominated and blown past its October highs. So, silver is lagging a little bit here, but, it doesn't mean that it won't go higher. As I covered the other day, I think, was it this chart or this other one here? That we could have 37 in the on the cards. I think it was a daily or a weekly. So that is the potential look that I am looking for with silver. I do think we are sort of destined to come up to 37, but if we see a little bit of a shake, things could come back down here, and maybe a retest of these sort of like 32.60s, 32.55, those sort of levels across through here. If we can get a sort of pullback down here, I'd happy to be a buyer around this level over here. I don't think this is enough of a significant level to say, hey, here's a breakout with a failed breakout, because yes, it broke higher than these ones, but it's still inside this larger up here, down here structure. Emphasize the point, I'll just do this a bit more. If we call it that, actually, no, I'm not going to do that because that would emphasize that we're getting a channel and sort of coming down over this. No, so look, I don't think a move up here is, if this sells down now, is like, oh, there's a failed breakout. A failed breakout would take out these highs here. I don't think the job's done yet. If we move up to say, 35.50 and then sell back down, well, I call that a failed breakout, and that would be coming a bit lower. But I'm open again to the idea of a little bit of a pullback here, get some silver back down in this 32.70s, get the people that bought these breaks, didn't take their profit, have this come back down a little bit, pull into this area. Let's drag a fib over it. This is an up. Come back to its 38, come back to its 50, around to these areas here to get long, to then move up and tackle these highs of 34.70s, 34.80s. And I just think that, this could be the thing that we see across the board. A little bit of a weaker, not that it's going to be driving these things, but a little bit of a weaker Aussie. I think we could see some profit taking in gold. I think that will then scare the rest of the metals market a little bit. You'll see a little bit of a sort of a proxy sell-off on silver. And, you could see these things come back. It doesn't mean the move's over. It doesn't mean, oh, wow, okay, now we've tipped. I mean, you've just hit an all-time high with gold. Silver's just broken out and moved strongly. It doesn't mean that, okay, it fails from here, pulls back here, that's over. It just means that, shake out these people, get better entries, look for this leg here. So yeah, I'd be still sort of holding off. I think we could see some interim sort of short-term moves, sort of with silver potentially here as well. Just checking a smaller time. I didn't realize that was on a daily. But yeah, so I think sort of if we get back below, say 30. Look, let's get back underneath these lows. You get back underneath, say 33.30. Where are we at now? 33.80. So underneath 33.30, be looking for a sort of pullback to these kind of areas over here. where we could see sort of like, price sort of bounce back up and buyers sort of step back in a little bit further, step back in a little bit more. But I think look, it could just push straight up over here. I think sort of this is the target where we are sort of going, but I would be looking for some sort of better entry than sort of necessarily buying it on open tomorrow. All right, flip along. We've got copper. Copper is hammering. It's just broken out from these sort of highs that we've seen. This is just back in mid-Feb, so yearly highs. So making new yearly highs. We drag this one right back across. We have a look at where it's been. Okay, so it's 488, which was that target that we had. Clipped it, pulled back, broke up again. This is an interesting thing that sort of so that copper likes to do. It'll find these little sort of supports that you'll notice, and it'll bounce, 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 shake out underneath, and then jab up a little bit higher. You could say that, okay, it doesn't really respect trends, but I think it does respect trends. I think it just sort of likes to shake people out that trade too tight to technicals with those trends as well. Down here, held, 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 and then, okay, bang, pulled out, pulled out. So again, look, I would like to see a little bit of a pullback down through this move here. We can see, again, 61%. All of these moves up here are really having quite chunky, deep pullbacks, almost to the 68%. Next leg, almost to the 68%. This move from here, if we dragged it sort of, I think from the lows down there, 61% there. I actually sort of had a look at it at this level here, but again, that's 61% there. I do think that, you could see a little bit of early sort of sell downs, particularly if DXY gets a push. If we see that, the funds are going to come from somewhere, and I think these metal markets are something that could be pumping into it because, look, we could see another leg down on equities, admittedly. I mean, look, that looks absolutely sick as a dog. But as I said, they both came down. There's a good chance that they could both bounce together. Doesn't mean they're going up, but they could both have a little bit of a bounce for a couple of days. FOMC comes in and then bang, get smacked down again. So I do think, again, same with silver. I think our price target is above it, but I think you can get a better level to get long on these things. And finally, with China, we're seeing it really just, it's found its little zone to grind through. Tested underneath that major support in that this week. I put the thing up. I was first to it all saying, hey, look, here we go, we're going down. And of course, rips back up. But what I sort of think with these kind of moves, when you break a very significant level, which it did, and this is quite a sharp sort of move down for the yuan in sort of a quick move, or US dollar against the yuan, whatever, this China chart, and the fast move back up, I think it means it's okay. We're going here. Let's snap all the people out. Let's push them out. Let's push them out. I still think it's destined to break down here. As I've said a long time, this is the price target down there. Rising support, high time frame. I think it just needs to grind, and then it'll eventually bang go. But I think once this goes, it's going to be quite a significant level. And I think you're going to see a few things break at the same time. So I'm open again to the idea of this potentially even squeezing back up towards 2.7 before 727 before sort of breaking down. I do think the target is down here, but I'm open to the idea of some early breakups and moves up above here. I think if you get above this level here, which we'll say China squeeze, if you get above, say, 7 to, I'm going to move that up just a little bit because it seems like to go just a point higher. If you get above this little zone that it's in over here, as I said, I think sort of like maybe you take out the highs here, take out the highs here, but I think your sellers are just going to step in where we've seen them most previously. We lost the internet again. Jesus. No, I haven't. That's good. I just didn't click the button. Pinpoint. Where we've seen sellers. Whoops. This is a fun thing. Every single one of these flying around. So yeah, where we've seen sellers back over these levels here, I think that's really your top end where you're going to cop it here. So you get above this level over here. I think this is the move that you're potentially looking for, up to then sort of push back down. But target's definitely down to the low side over there. This could come in line with Aussie just continuing to range a little bit. US dollar buying in DXY, US dollar buying against the China. If this pushes up, it also lays into the idea that you might sort of see a little bit of sort of gold weakness as well. So all these kind of things are all sort of predicated moving together. So we'll see how things open up on the start of the week. But I think it certainly sets up for the idea that It's just too obvious a trade to just continue smashing it all in that direction. I think they got to sort of create some tiers. I think they got to sort of squeeze some people, school some people first, and then they'll continue. So let's see how this sort of plays out. But quickly have a look at gold silver ratio. We're seeing this line strongly defended here. This was the target. This is where we said, look, it's the same thing every time. Like, I mean, how many times have we emphasized this line down here, even with the price target when we moved down here, and the same sort of call that we had when we broke through here. This is where the buyers are. Buyers are. So it just means that this is a very significant level that once it breaks, you're coming down. It's not too far. Well, it's kind of a little bit. It moves down a little bit and sort of to this sort of medium term rising support. So I think there is room for this thing to come down. But again, you may sort of see it sort of just consolidate around this area. I don't think we're going to be going back up to 91. I don't see this happening at the moment. It could be. I mean, look, I mean, it really is really in this large kind of range, and we're just at the bottom end of the range here. So should it get onto a squeeze, yeah, okay, maybe it could sort of push back up to over here. But I think, you may see a little bit of a push up here while gold and silver maybe pull back a little bit. And then as it turns around, I think sort of once you see DXY starting to push down next with a major move, I think that's when we'll see our break down underneath these levels down here. I think this will come at the same time that DXY breaks through 103, is it? What's the low level there? Where we put the alert? 103.16. So yeah, I think this bottom level here will break as DXY breaks 103.16 supports. All right, cool. So that's the charts. Quick look at what news and data we got coming up for the week. Bit of China data in that early on the start of the week, and that nothing too. It's looking like industrial production down a little bit. Quite a significant little drop off there, actually. I think if that bucks the trend, you could see a little bit of a strengthening of it, or at least holding that level. But as you see, like potential weak for yuan, so that would obviously see that chart moving up a little bit would sort of come in line with a little bit of a weaker industrial production as that sort of data comes out there. Retail sales looking to be relatively flat, moving through there. The rest of unemployment rate, what are they at? 5%. Okay, a little bit higher than the rest, but again, I don't really trust these numbers, and market doesn't really value them a great deal either. So I think that's going to be pretty much it. Well, it is pretty much it in terms of data for the Monday. Moving along, Monday night, we do have retail sales in the US. So you're looking at a little bit of a tick up there, so quite negative numbers previously. Look, a bit of a stronger move here, stronger retail numbers. That leads into the idea that you might have a little bit of US dollar strength should it come in with these numbers. These are still overall weak numbers. These aren't sort of like, wow, they're pumping along. I mean, 0.3% is shocking, but it's better than it was. So it moves in that direction. So market moves in that direction. The thing is with these things, if it's better than it has been previously, and it comes in line, well, it moves up, and US dollar strengthens in anticipation, and it moves to that. If it's not a solid big number, there's no reason for them to change the landscape and say, hey, look, I mean, retail sales isn't going to change the landscape. It's not a CPI, it's not an NFP, it's a third tier bit of news. But the thing is, as that comes out, if it's a really strong number, it holds more weight in the idea that the move up from DXY might actually hold a little bit longer. But all in all, that's a weak number. You're not going to be buying US dollar long term based on 0.3% core retail month on month sales. You're just not. It doesn't work that way. So, if you get stronger sort of retail sales, you might sort of see these things pick up. We've got Empire Manufacturing as well, expecting quite a strong sort of slowdown there as well. Maybe this is expected to be quite a strong and you come in a little bit less. But again, this kind of data here, I think it leaves the door open potentially for short-term US dollar strength push. Moving through, we got Tuesday. We got speakers for Aussie. Nothing really comes through here. Nothing through Asia on Tuesday. Bit of CAD data. What are they doing with their CPI? So mid twos and that. Slight tick up, holding flat. I think once the numbers here, okay, so 2% is the target across the board for a pretty much universal target for all central banks and that. I think pretty much they came to the sort of acceptance that maybe sort of 2 to 3% is a little bit more of a realistic target, and that they still look for 2%, but they're happy to deal with it. As we saw, like, it's a 2.7% in the US, and that's seen as like cooler. It was moved in the direction. but it's not a target. But this is kind of an area where people can call it sticky, but it's not an issue. And where that's important with the US is obviously the recession idea of things as well. A little bit of US data coming out here, nothing really major. I do appreciate these 11:30 bits of data, soon to be sort of 10:30, of course, when we change our clocks next month. Coming through Wednesday, so middle of the night, it's a bit of a late time for some Aussie data coming out 1:30 a.m. These GDT price indexes, is something to do with the milk or something, I'm pretty sure. Yeah, dairy products sold at auction. Yeah, it's funny because I was trading this a while ago. I was looking at this thing, and this is, even though it's marked as low tier data, would always send New Zealand dollar rocketing. I was like, that's an odd sort of thing. Like, I mean, it's not really a stick out bit of data, and nobody talks about it. But yeah, that can actually move the New Zealand dollar quite strongly. Well, it had previously anyway. Okay, moving along anyway. Wednesday, we got BOJ, and okay, so the market seems to have cooled off a little bit now, and they're looking to have the rates sort of stay the same. I think still the risk is that they shock them, they would sort of hike them, but I don't think that'll be the case in that. I think that we're seeing yen sort of strengthen on this idea of this happening, but you know, if this doesn't happen, if it comes in weaker like this, it kind of confirms the idea that this BOJ are very wish-washy with their approach towards this stuff. And if they still sort of hold off a little bit more, you're going to see the yen weaken. The yen has been sucking out a lot of strength from that side of the market as well, because remember, yen is a risk-off asset as well. It's vying for the energy and sort of the flows of capital that the US dollar can take. And if they go, okay, well, actually, hold on, wait, BOJ is a bit wish-washy and they're putting it off for a bit, well, let's take the money out of the yen that we were putting there for that anticipation. Let's put it back into something similar. You're not going opposite, but let's put in something similar, which could sort of bide a bit of time, make a little profit while you sort of get round to the next BOJ potential rate decision where maybe that time they'll sort of go. So again, these sort of things don't mean ultimate flip and shift and okay, US dollar's back for its next run. But it does lead into the idea you got a medium term USD strength potentially coming. Holding rates flat, expectation for the Fed, 5 a.m. Thursday for the FOMC. This is the holy grail sort of one of bits of data and news. This is what we call tier one data for US or for pretty much any central bank. And if they're holding rates flat here, people have been talking weak economic data, weak economic data, inflation, CPI, not an issue. So, we don't need to sort of have the sort of rates sort of held higher for that kind of stuff. So, the idea is that sort of potentially they would have been dropping the rates because the CPI isn't the issue, the recession's the issue, but now they're sort of going, okay, hold on, wait, no, we're actually going to hold it a little bit higher. So you could see a little bit of that sort of strengthening with US dollar with the anticipation and the idea because people were pricing based on weak economic data, based on inflation sort of cooling, that you might actually see them cut the rates a little bit because they don't need to hold the rates high because of the inflation coming down. Economic data is not great, so that's a cut, and that's a cut. So the fact that they're looking to hold now, again, I think this could see some strength coming with US dollar here. Oh wow, they've ticked it up, and we've got 11:30 that day as well. We've got employment change and employment rate for Australia. So this one is my favourite bit of data for the month, and because they always get it so drastically wrong. This is the first time I've seen them for a while pop it above 30, above 30,000. Generally, it's just mid 25, throw it 25, and they get it wrong by 20,000 or so, or say 50% each time. Whoops, that means we've lost our data. Lost the internet, doesn't really matter, we're almost finished. So where were we? Yeah, this data coming out here, 10, dyslexia, 31,000. So look, with Aussie here, if we see the number creep up, weak for Aussie. So if the unemployment creeps up, weak for Aussie. If the numbers are low, weak for Aussie. So they're expecting a bit of a cool down here, expecting employment rates to stay at 4.1. 4.1 is not too bad. Like, it's actually a very good number. But given how it's been dancing around 3.94, 4.1, slowly creeping up a little bit there. So in unemployment up and employment down will be weak for Aussie there, and obviously the vice versa if that sort of comes through. Then we've got sort of pound data, whatever. Looking for a little bit of a slowdown there as well. Like as a general sort of macro thing, a real global thing, it doesn't look sort of super sort of you know super rosy around the area, which overall is not great for risk, which is overall probably why gold has also been smashing a little bit higher and Aussie's been lagging. So these kind of things sort of feed together with that kind of idea. Unemployment claims still coming in exactly the same, comes through Thursday night. And then leading into the weekend, we have actually no sort of data coming out. So we got a bit of a speaker in that at the end of the week, but nothing really of note. We've got sort of retail sales from Canada, but really who cares? Well, not with the markets I'm trading. So look, actually a few bit of data. We got a bit of a quieter sort of start to it all. We got sort of retail sales Monday night. And then sort of Tuesday, nothing. And then sort of pretty much from Wednesday, we kick off with the BOJ, FOMC, the Aussie employment numbers. And we've got the pound. Actually, what are they doing with their rates? They're looking to hold as well. So, yeah, it's a bit of a quieter start to the week, but certainly picking up towards the end of the week. All right, that's it from me.